once you realize crypto is not some crazy get-rich-quick thing, this is the fundamental foundational technology of the next generation of tech. And once that light bulb goes off, ask the Gen A's, okay, ask my grandkids how they build businesses. Well, you build on blockchains. What are you talking about? Build on blockchains. And why is Jamie Dimon having an apoplectic fit? And why is Elizabeth Warren, those squinty eyes giving us this bullshit? They're scared. They are scared death. They are so scared because they've had an 838-year monopoly. And she looks like she's that old. No, 838-year monopoly and is getting busted. And this is going to liberate $7 trillion of rentier theft. And when you put $7 trillion into the hands of young people, the world is going to be amazing. We haven't even started.
Yeah.
We haven't even started. This is what's so amazing. So one is, when I say we haven't even started, so what I'm talking about there is the big cycle. My 14-year cycle, my 54, 68, 82, 96, 2010, 2024, which is still 3 weeks away. That's the beginning. That's the beginning of the middle part of the S curve, right? That's where we go from, 10% adoption to, and like we're at 11 now, to 90. It's going to be an unbelievable decade. I mean, unbelievable. So much fun. Doesn't mean it won't be without volatility. It's gonna be fun. So that's the first thing. Second thing is we're still in crypto summer, right? Crypto summer is not straight up. Crypto summer is casually drift. And we've been talking about this since June.
Chief Investment Officer and hedge fund founder Mark Yusko argues that the crypto bull run hasn't even truly begun yet. With Bitcoin running up into the mid $40,000 and up 160% for the year, a lot of hype and attention has returned to crypto. Yusko says that this is only the start. With still 2 weeks left in 2023, Yusko believes the real action is going to come in 2024, first with the approval of the spot Bitcoin ETFs. Yusko is expecting in the first few weeks the ETFs will see $30 billion worth of inflows, which will put a huge amount of upwards pressure on price. Following this, Yusko is looking at the Bitcoin halving coming in April of 2024 to be the next bullish narrative investors will be chasing. Make sure to stick around to the end of the video where Yusko makes a case for Millennials and Gen Z being major catalysts for the long-term price growth of crypto. Also guys, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It gives the latest expert predictions, any breaking news, and top on-chain analysis all in a nutshell. Click the first link in the description to join over 30,000 others in becoming a better crypto investor right now. Now here's Mark Yusko on why this is just the beginning.
We've been talking about this since June, that we were going to the low 50s.
You were more convinced than I was, to your credit.
I know, it's the way it happens. And Tim Peterson's model is the model, right? If you want to know the value of the network, you look at Tim's model and then you say, okay, well, if we're below the value, then who's buying? Investors who buy things below fair value. And we were going to creep. And it's been this, oh God, so beautiful. It's just a beautiful movement towards that low 50s. But then the halving is going to happen and fair value is going to double. And people are like, no, that's not how it works. I'm like, yes, it is. Because the difficulty adjustment aside, but the bottom line is the miners got to get paid. And so the fair value is going to double. And so then we're going to get to the beginning of crypto fall. And that's next June. That's when the parabolic stuff starts. And next Thanksgiving, oh my God, it's going to be crazy. I just can't even imagine how crazy next Thanksgiving's going to be. So that's why it's just beginning. And then on January 8th, the king is going to be crowned. Okay, it's Elvis's birthday. It's also my son's birthday, his 13th birthday. And the king is going to be crowned. And BlackRock's going to be approved on that day. First day, 2 bills. Easy. I might be light on that. Maybe it's 3 bills. But at least 30 bill is coming in those first months. And remember, we went from 10K Bitcoin to 59K Bitcoin on 10 billion of flow into GBTC. If you go back 70 years, no one, right? No fiduciary owned anything but bonds. Equities were not.
So funny to me.
Because you were a bad fiduciary. Because remember, bonds are a contractual claim. Equities are contingent claim. You might not get paid back. They could go bankrupt. You might lose everything. And there was no culture. And then slowly the culture developed. Markowitz Markets came out with this theory in 57, and people said, oh, if I take bonds and add stock, my risk is actually lower? What? Okay, so then stocks became a thing. And then international stocks became a thing. And then in the 80s, it was early 90s actually, it was 90, 91, 92, commodities, hard assets became a thing. But no one invested in commodities except these crazy people we've all seen in Ferris Bueller with the hand signals in the pits in Chicago. And that's who traded commodities. Commodities were not for institutional investors. Well, Goldman Sachs came up with this idea to create something called the Goldman Sachs Commodity Index. And people were still afraid. And so one of the genius things was people did principal protected notes. So they basically used a combination of bonds and futures on these commodity indices to create hybrid asset where you couldn't lose your money, right? They bought zero interest or zero coupon bonds and they'd accrete to the value and you get your money back. And then they used 20 to 30% to buy these futures. And so if commodities went up, you made a bunch of money too. And the institutions were like, can't lose my money. Oh, okay, I'll try it. And they dipped their toe. And then the Sharpe ratios went up, the risks went down. They're like, bring it, and boom. And once everybody started buying not the futures, but the actual commodities were just a rocket ship. And that's what's happening here. We're not talking about futures. We're not talking about making paper Bitcoin. We're talking about every dollar that goes in. They don't get to say, yeah, you kind of own a derivative instrument. They have to go buy a Bitcoin. And I got news for them. Not everybody's going to sell. And so at Econ 101, that's what Danny's talking about. Econ 101, when demand increases and supply is relatively fixed, it's not perfectly fixed, because there are a lot of people who say, I'll never sell.
They'll sell.
They'll sell. Of course they'll sell. They'll sell little because everybody's got that FU amount. They want to have actually in treasuries. They've held it in crypto, but it would be better if it was in treasuries. And then they let the rest ride, the house money. And that's what's going to happen as we start to get into six-figure Bitcoin, and that's going to happen. But they have to buy. And someone else was trying to ask me, I haven't responded yet, but I will this weekend. Well, it took gold a long time to really ramp after GLD. Okay, remember who's on the other side of GLD. On the other side of every long trade of GLD is JP Morgan short gold. There was a point a number of years ago, this was right after the financial crisis, and all the banks had to put their information out in public, right? Because they were all going through this conversion to become banks. And long story short, Scott Besson, this famous hedge fund manager that worked for Soros and now runs a firm called Key Square, based on the chess, the four squares in the middle. And long story short, he actually read, he says all 44,000 pages. I'm not sure if he actually read all 44,000 pages, but he read all the stuff on JP Morgan, and he found that they were actually short 2 times the world's gold. Short, naked. And that's why gold was stuck, like between 200 and 400, it just wouldn't move. And now we're at 2,000 because now the long side pushed it up. And yes, it took a while because JP Morgan still spoofs gold every year. They're naked short selling, and they get fined every year for spoofing $1 billion. Maybe it's not $1 billion every year, but a couple years ago it was $1 billion. But they're like, we make 200. We make 20 billion. So it's 5%. Yeah, pocket change. Look, here's the thing. I don't want to go completely lunatic fringe crazy on this, but no one owns Bitcoin.
Yeah, you might be right.
No one owns Bitcoin. There are 8 billion people in the world. Very, 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 very small number actually own Bitcoin. And part of it's because 3 billion don't have electricity with regularity, so they're not going to own it. Another 3 billion don't have a bank account. Think about that. 3 billion people in this country, in this world, don't have a bank account, so they can't, buy things. And there's all these different reasons. Many have never even heard of Bitcoin, believe it or not, right? There are people who have no idea what it is. And when you start getting to the 100 million or 150 million, whatever the number is, that actually do, it's this teeny, teeny, tiny fraction. And even those, right? There's a whole bunch of them are like, I'm not sure I believe it. I'm not sure it's an institutional asset. I'm not sure it's real. It still could be a Ponzi. It still could be a rug. Once the ETF happens, and once venerated names like BlackRock and Fidelity and are here, forget about it. This rumor, which I think is a little disingenuous personally, but
a sovereign.
Yeah. Now Qatar saying, oh, we should convert our whole $500 billion. Maybe they said that. I doubt it, but maybe they said it. Maybe it was a joke, but they're not going to do that. But would they do 10%? Would they do 20%? And look, every corporation corporation, in theory, should listen to Michael Saylor, who's saying, if you have this devaluing asset just sitting idle, your cash, are you doing a disservice to your shareholders? When
I'll actually push back against
down, what?
I'll push back against that actually, but you...
No. I will too, for the reasons that I don't believe Bitcoin should be all of your assets, ever. I don't. But to have a portion that's deflationary instead of inflationary could make some sense. But my point there is, even when he did it, and it was successful, then it wasn't successful, and now it's successful again, not everybody else did it, right? Not everybody went and issued bonds and bought Bitcoin because they're afraid, or they don't think this is a good fiduciary move, all kinds of reasons. But as this asset becomes more adopted, a couple things are going to happen. One, the volatility is going to shrink, because remember, volatility is simply uncertainty about future outcomes. That's what volatility is. T-bills have no volatility because there's no uncertainty. In 91 days, you're going to get paid, and it's never not happened. And it probably never will not happen. I mean, maybe never is probably too strong, but there's no uncertainty, so there's no volatility. Amazon stock has really high volatility because there are people still today. Michael, I met somebody, they still said, oh no, maybe you said this.
I said this.
You said,
yeah.
Oh, that's right. But I actually met somebody too that said, I don't buy very much on Amazon. I don't know that it's really, what? Maybe there is this secular change where we're swapping a store of value, real estate, for another store of value, Bitcoin et al. But the other thing, and this is a Dan Morehead thing too, if you look at Web 1 and Web 2, all of the value went to the application layer. None of it went to the protocols. TCP/IP, we're using it right now. Tim Berners-Lee didn't get paid for inventing website, can't own it. In Web 3, we're going to work on L1s and L2s and L3s, but you can own those. And so maybe that home is now ownership of the infrastructure layer of the Internet of Value. Once you realize crypto is not some crazy get-rich-quick thing, this is the fundamental foundational technology of the next generation of tech. And once that light bulb goes off, ask the Gen A's, ask my grandkids, how they build businesses. Well, you build on blockchains. What are you talking about? Build on blockchains. And why is Jamie Dimon having an apoplectic fit? And why is Elizabeth Warren, those squinty eyes giving us this bullshit? They're scared. They are scared death. They are so scared because they've had an 838-year monopoly, and she looks like she's that old. No, 838-year monopoly, and is getting busted. And this is going to liberate $7 trillion of rentier theft. And when you put $7 trillion into the hands of young people, the world is going to be amazing.
So there's Mark Yusko on the future of cryptocurrency and Bitcoin. Yusko's perspective is clear. The real momentum in the crypto world is yet to come, and 2024 is poised to be a watershed year. He underscored the significance of the anticipated approval of a spot Bitcoin ETF, predicting a surge in investments amounting to $30 billion in the first weeks alone. According to Yusko, this is likely to create a substantial upwards pressure on Bitcoin's price. Furthermore, looking ahead to April 2024, Yusko highlighted the Bitcoin halving event as the next big catalyst for the crypto market. This event is expected to create a new narrative for investors, driving the long-term growth of Bitcoin's value. For those keen on keeping abreast of the rapidly evolving crypto and Bitcoin landscape, my daily 5-minute crypto newsletter is a must subscribe. It's packed with the latest expert predictions, breaking news, and in-depth on-chain analysis. Click the first link in the description to join a community of over 30,000 informed crypto investors. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.